Exactly that. I mean, I guess property would probably be the one you'd look at, more rate-sensitive industries. So we've been buying global REITs for the moment in some of our portfolios. But actually, if you look at the UK, that could be a good play as well. Now, I think the stat is something like 9 billion extra mortgage payments are coming on next year. So being one of them as well, sadly. And you'll see a massive effect on consumer spending, I imagine, as we go through the year, which probably will tip the UK into recession. So it's interesting that Goldman's are forecasting rate cuts by about June time. That's about our house view as well. And then, like they say, the Bank of England will start cutting rates pretty aggressively there afterwards.
This time of year, everyone starts reeling out their 2024 forecast. I'm sure you've done the same as well. But one thing that never fails to disappoint is the UK's relative performance in terms of its blue chips compared with rivals as well. Yeah. It's the old waiting for Godot, you know, the Samuel Beckett play as well. He never arrives. And so the FTSE outperformance, are you brave enough to, because I know a lot of people are calling Europe over the US in this coming year, and I kind of see one evaluation point. Any thoughts about whether the UK can finally turn itself in from the caterpillar to the butterfly?
Well, I think it's Jurassic Park. It's been referred to by a lot of industry commentators.
I think,
right?
I haven't heard that one.
A hedge fund manager from Marshall Wace in the States referred to the FTSE 100 as Jurassic Park. He's even got my dinosaur tie.
You have got your dinosaur tie. Yeah. Well done, you. Is that a Diplodocus?
It is a Diplodocus, yes.
Which I grew up with being told it was called a Diplodocus, but apparently it got a rebranding about 20 years ago.
This is the vegetarian non-meat eater, right?
I'm the vegetarian non-meat eater, yes. I wouldn't eat Diplodocus. Oh, well, him or me?
No, the dinosaur.
Well, exactly.
It's a veggie dinosaur, yeah.
Wait, are you talking about me or the tie?
The tie. The
you
dinosaur
just called me a
on the
dinosaur because I don't eat
meat. The
meat.
dinosaur on the tie. This is the vegan dinosaur.
Go on then.
Right?
Is the FTSE stuck in the Jurassic Age, or will it find itself, I don't know, to the Stone Age or something? Maybe the Iron Age, let alone the 21st century.
I guess the FTSE 100 is one of those where it's not a direct reflection of the UK economy. I mean, it has a lot of dollar earners. About 70% of the FTSE are dollar earners. You look at a lot of the companies that are listed here, and they don't have any real kind of impact on the UK economy. Companies like Standard Chartered, for example, all of their profits are really from Asia. So though you can see the FTSE 100 is gaining next year, I think a lot of it depends on China, especially with the amount of miners and oil companies you have in the FTSE 100. But I think what's particularly interesting is the FTSE 250 and those mid-caps, because if the UK economy does well, that's more reflective of it. It tends to be anyway. Yeah. So actually we could see the FTSE 250 really outperform. If the UK goes into recession and we see the Bank of England cutting quicker, a lot of those house builders, discretionary names that we see in the mid-cap area could really do well.
What about the divvy support? I mean, it didn't look very good when gilts were trading over 4%, but now if we are going to see underlying gilts fall, well, again, we don't know because, of course, we talk about potential recession, but Bailey holding the line at the moment on interest rates. So the interest rate support story is just not quite ready to play out yet, no?
Not quite yet. It's interesting. I mean, we've had some strong data out even this week. I mean, claimant counts on Tuesday were still pretty strong, above consensus forecasts. So I guess that's something that's going to be playing on the Bank of England's mind as we go into next year. What's also interesting, I think next week we have CPI reading, which could set the tone for the early parts of next year as well for the UK. So it's one that the Bank of England's got to keep an eye on. I mean, we're still 4.6% CPI, over double what the Bank of England's trying to achieve.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.